Hey guys, welcome back. DeFi, Degen, Drip, and Farm for Popping. I'm your host, Drip Coach, dropping knowledge bombs on all Forex Shark related projects. And today's video, it's time to dig back into the spreadsheets, and I'm going to show you how I have come up with a hypothetical low case or worst case scenario for the not only the PIGGS token price, but also what I think the PIGGS token is worth in a bear market and what the value in dividends is. So these are all hypothetical, but using the actual numbers that we can see from injections from the capital and even forecasting what we could get from the single asset lending, I think gives us a very good opportunity to guesstimate what the price of PIGGS would be in regards to that value. Remember, price is what you pay, but value is what you get. So if you're keeping the PIGGS, you're keeping it because of the value that you get from the dividends. And I forecast this out from a 1 year to a 4 year person holding based on that forecast. So if you want to find out what that is and what that magic number is, stay tuned for this. So we're going to dive straight in and show you exactly how I came up with this. So first up, we had the current projections without the supplement from dogs. So we saw in my last video that initially we only got the $7,000 that came from the inflow of fees. And so the first thing I'm going to show in my spreadsheet is what if we only had these fees that we are generating. What does that average look like? And what if that's all we had going forward without any of the supplemental buybacks or without any of the injections from the the single asset lending that Forex is going to be adding. So we need to look at that because that is the worst case scenario. Remember, that is the true utility of PIGGS right now with none of the other utility development, is that the PIGGS will basically pay you out in stablecoin rewards, and those rewards come from the fees generated on the farm, and that's it. So if we only had that, you need to evaluate that based off of that worst case scenario. So we also need to look at how the PIGGS token has been increasing since the farm got launched. So remember, PIGGS are in an inflationary governance token that are farmed from the 2 farms on the animal farm. God, it's a lot of farms. I'm sorry for you guys. But it has deflationary mechanics, so it can be burned. And there is also a limited supply available on PancakeSwap right now. But we can still use this forecast and trend to see what has been happening over the inception of the farm, and then use that as a forecast of what will be going forward, in addition to what we can expect to see based off of the actual emissions per day. This is not up to date. So right now it's 141. We are currently in deflationary. So this number will get moved down. But let's take a look at the actual chart real quick. All right, so first up, I went ahead and looked at the supply that we had on 28th of June, and that was where we first started to move up. Then I also looked at the supply on 31 October, because this is right before the launch of the farm with the pig pen rewards and everything else. So everything before that was kind of speculative and we had a lot of delays, but either way, it was important to look at what this average was. So we had 221,000 on June, 298,000 on October, and as of the numbers I took on 8th of Feb, now today the 9th, we had 346,000. And these are the days in between 8 Feb to 28 June and 8 Feb and 31 October. So that gives us a forecast of about 555 per day from June and 482 per day from October, which gives us an average of basically 518 pigs per day that we have added to the pig pen. Remember, this is in the pig pen. That's on this graph here. These are pigs in the pig pen. So I was looking at that number to basically forecast what the pig pen would look like, because that is important in order to find out the dividends. We got to know how many potential pigs could be in the pig pen in the future. So taking that number here, 180 days is all I went forecasted out, just 6 months. And that gives us 439,000 if we had the average, this number. And then if we were at restricted, which is what we were at the but the creation of this spreadsheet, we were at restricted, which is 216 per day, but now we're currently at 141. But either way, that number 180 days from now will be 385, right? So It's just giving us two different numbers to look at regarding the future of what could be in the pig pen. Now, next up, we need to look at, well, before we look at that, we need to see what that would be in regards to payouts. So all I did here is take that date and take the current amount of pigs that would be in the pig pen. And then I show what that would be if it was restricted, and then deflationary, and then the BSD vault amount that was there, and then what that daily payout would be. And then the weekly injection, this number comes from the basic average of the amount that we have had from just the fees. So I got that from here. So I basically took what was on Dune Analytics, added up each day's worth of fees, and then got the average. And then weekly would be this number here. So basically every 7 days, $81,000 when you take the average of this, right? So if we were to inject that weekly and we are still paying out the 3% per day, you'll basically see that over time, clearly the rewards can't outpace the amount of expected dividends coming from the pig pen and the amount of stakers that are in there. So as we zoom out and creep down, you can see that it basically gets down to about 2.5 cents, but it starts to kind of flatline a bit because remember, you're paid out 3% of the BUSD vault. So as the vault decreases, that total payout per day decreases because it's 3% of a smaller number. So there is a part where it starts to kind of flatline and taper out. So you'll see this like 2.5 cents to 3 cents took weeks and weeks and weeks to get there. And at the top, we were dropping, you know, like 1 whole cent or so a week, but then it kind of flatlines out. So this is like a worst case scenario that could happen if we didn't have any other utility and just had the typical average amount of fees from transactions, you know, getting in and out of the pools and farms. So it looks like a 2.5 cent to 3 cent dividend. And this number here represents the different dividend payouts. So if we go into deflationary, which we're in right now, that's 141 pigs per day that are minted. And assuming all those pigs get put into the pig pen, because again, we've seen 500 or so on average every day. So this is not assuming any of those pigs are being sold, assuming they all go into the pig pen. So there's a lot of assumptions you have to take in this with a grain of salt. But anyway, we go from 11 cents, which we are now, because this was before the $100,000 injection got added, and all the way down to about 2.5 cents to 3 cents about 7 months from now. Now, next up, we have the dogs allocation, as well as what could be added from the single asset lending. So I'm going to look at the bridge first because that's what I have here, but not technically. I'll go down here and skip that. We'll go straight here because that's how I actually did this. Nope, that's wrong as well. I don't have just the dogs by itself. But anyway, I'm going to show you what the dogs would be because I covered that in another video as well. So if you went back to one of my old videos, this one here, dogs token drip network animal farm, where it was talking about when Forex mentioned how much was available in the farms. So in this video, I showed you how to actually go about calculating that and seeing what's available. And in this video was about 12 million or so. I can't remember the exact number. I didn't watch the whole thing, but you can watch how to figure that out. But I went ahead and redid the numbers again just to see. So when you come over to the farm deployer wallet, you'll find that there's still 388,000 BUSD LPs and 10,400 BNB LPs. These are from V1, and these are what he is unpairing and getting liquidity from. And then he also mentioned the AMA that there's still like another 500,000 or so. So we'll just say there's about 5.5 million to 6 million available. And if he's doing that 100,000 to 600,000 injection, then that actually adds up to what we see. If you wanted to get these numbers exact, you would take this 388,000 and then you can multiply it by the actual price of the dogs LP and multiply it by the price of the dogs wrap BNB LP. And that'll give you the amount of money that we have sitting available in these LPs, right? So that being said, we can definitely still support that $100,000 injection monthly for quite some time. So that's where also this calculation comes in with that $100,000 injection as well as the hypothetical, what we can get from bridge staking. So to find out what that is, I went and looked at essentially what's currently available on Stargate and on Seller and on multi-chain. And the highest that I saw is about 10%. So I know Forex mentioned 10 to 30%, and that's probably with the compounding. But remember also a portion of this is going back to the user. So in order for me to actually run the numbers, I just took the highest percent, which was 10, and decided to run that number with the calculation. So this is assuming that the total liquidity that we have on the the single assets, we're getting 10% yield. You'll see that here, 10%, 11%. So I looked at all of those and just took the average hypothetical. And that's where this number up here comes into play. So assets in the pool. So for BNB, BUSD, ETH, BTC, there's a total of 10 million, almost $11 million. Now, again, take this with a grain of salt, because in a bull market, these numbers will all change, well, except for this one, dramatically, because the value of these assets goes up, right? So that's why I say this is a worst case scenario in a bear market, so we can find the bottom of the PIG's price and the value associated with it, because we are at essentially the bottom. So we may go down lower from here, but technically probably not lower lows than we've already had. So anyway, taking this out to 10% APY is basically almost $1.1 million a year, 91,000 a month, or 22,000, almost 23,000 a week that could be added as an injection towards the Pigpen dividends, right? So simple math, we just add that here. So that's what this is. So it's taking that original 81 that we're getting from the fees and now adding in the 23 that we get from bridge staking. So we go from, again, the 10.8 down to a low of 4 cents, basically. So it definitely staves that pressure off based on whatever restriction that we're in. And lastly, looking at the exact same thing, but adding the 100K. So now we have the 100K injection on average that he could do, because I just showed you guys there's still about $5 million in liquidity there. So that can definitely be added for weeks on weeks on weeks. And 100K plus the 81K from fees plus the 23K coming from the stable swaps gives us about 204,000 weekly injection. So that takes us from the, again, 11 cents and down to a low of about 8 cents, again, out to October. So what does that all mean in regards to the price and value of the asset, right? So again, these are all clearly hypotheticals. If any of the assets pump during this time frame, if dogs goes up during this time frame, then that's more money. So the point I wanted to get at is to find, like, what is the actual value of the pigs. So we know that right now with pigs, there's a hypothetical floor, and that is over here at this $55 level. I hate it when it does that to me. Always changes this back. So about $55, $50, somewhere along there, 55. So that's what we've seen just from how the asset is traded. But that was before there was actually any utility in there, but that's still a hypothetical and psychological level. Now I'm going to show you what could actually be the level based off of the perceived value of the asset, again, based off of the dividends that we get, because the whole purpose of pigs is to not have to sell it. So now that we know what could be injected with it and what the value or the dividend of it could be, even if we are minting out large amounts of pigs at the previous rate that we were doing, you can see that, 8 cents, 6 to 8 cents, 3 to 4 cents, and 2.5 to 3 cents is the levels. So what I did is take that average. So if you add those up, 8 cents, the average of each of these, 8 cents, 5 cents, 4 cents, that's 17 cents. And then that actual middle ground is 5.5 cents. So the average of all three of these averages, if that makes sense. So that's saying that that dividend per pig would be basically 5.5 cents per pig. Now, to find out what, to me, the value of the pigs would be, I basically put this in. It's always going to be the same, but I was just looking at it with different numbers. So if you had 50 pigs that were at 5.5 cents per day, that would give you $2.80 per day. I'm sorry, 5.5 cents per pig. That'd be $2.80 per day, $84 per month, $1,000 per year. Now, if you were only going to hold these for a year, I'm looking at this because remember, this is an asset, it pays dividends. So I'm forecasting that people that get in this would hold these for a year. We've seen drip last a year, so I definitely think the pig pen can last a year. So I was like, all right, if that was the case, someone with a short-term mindset would basically say that that means the pigs would be worth $20.16 because they would like to see a recoupment of their investment at a worst case scenario in 1 year, and they'd want to dump. Now, scaling that up, you basically have a 2-year cycle, which I said, okay, that's definitely feasible as well. Bitcoin's a 4-year cycle, so half a BTC cycle would be basically a $40 pig value. Same thing, you would recoup your investment in 2 years off of dividends alone with a 5.5 cent price per pig payout dividend. Then I did the same thing for 3 and 4 because that is the BTC cycle and all crypto follows that. So I was like, logically, definitely go out to 4 years. Now, what does that mean? Well, ironically, when you average all 4 of these up, these 4 values, you come out to a $50.40 pig. So I did all that math to basically come out to the exact same level. Now, take that with a grain of salt, because again, based off of how the assets performed and the single asset lending and all the other stuff that he could build, this is a range. So I could see $50 being that low, that we could absolutely hit, but I don't see it going any lower than that, just simply based off of the dividend payouts. It could, because that's a range. So you could say, plus or minus 20%. So 40 to 60 would be the range. So meaning it'd be a great time to accumulate anywhere in there if you fall into at least the 2-year cycle theory of holding your pigs and you're willing to sit it out and wait and collect the dividends. So I just thought that was kind of fascinating to run the numbers and see. And so looking at what the worst case scenario is with no utility, and then what is kind of right around the corner with some utility. And again, remember this number, the 10% from bridge payouts, if these assets pump at all, BNB goes up, ETH goes up, BTC goes up, that means we now have more capital on that. So, see a 25% increase in these assets. Well, now we're loaning out more as well. So I just quickly paused just to show that. So just increasing this by 25%, BNB going up from 300 to another, say like 390 or whatever that would be. What is that? 360, something like that. You guys know what I'm trying to say. If everything goes up by 25%, then now we have 13 million per year as opposed to 10 million, and you're injecting another 6,000 per week just because of that. So just keep that in mind. That's why I was forecasting what the absolute low could be, what the worst case scenario could be, because we're still in the bear market. And that's why I ran this out to 6 months or a little over 6 months, because I definitely feel that by the end of October or middle of October, we should have started finding a floor in crypto and climbing out. And that's what all the people smarter than me say about the cycle. So that's where this comes from. So either way, point being that 5.5 cents per pig could be the low end average dividend, and speculatively a $50 pig floor price somewhere in that range, 40 to 60, is probably a good opportunity if you're bullish on pigs to accumulate. So right now with pigs sitting at, 65 or so, this could still be an opportunity. And if it drops any lower, buy them up if again you're bullish on this. And it kind of already happened. I think some people have purchased off of that low that we hit already. So what was that? Yeah. So we had got down to 60 and got back up to 65. So keep an eye out on that if you are willing to hold for at least 2 years or so, and you're bullish on the developments and all the other stuff coming out on the platform. And again, take all this with a grain of salt, because there's a lot of big ifs and speculations on how this was calculated, but I did find it fascinating and hope you guys did too. And if you did, you know the drill. Smash that special help brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real-world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.